Ever feel like you're trying to piece together this giant economic puzzle?
Yeah, trying to figure out the big moves.
Exactly. Wondering, what's actually going to reshape our financial future? Well, that's what we're digging into today.
We are. We're looking at this pretty interesting document called Trump Effect Impact on USA Economy and Bitcoin.pdf.
Right.
And it basically lists out a whole bunch of significant, really big investments announced recently across the U.S. economy. It's like a snapshot of where the big money's flowing.
And significant is maybe an understatement. We're talking trillions collectively.
Trillions, yeah.
So our mission, our goal today, is to pull out the really key stuff from these announcements. Try to understand what it could mean for the U.S. economy. And then, this is the interesting part, explore how it might connect or, ripple into Bitcoin and crypto.
We want to give you the essentials, basically.
Yeah.
Avoid getting totally bogged down in every single line item.
Exactly.
Nice.
We're trying to provide some clarity, some insight.
Consider us your guides through this.
Yeah.
We'll point out what really matters.
Okay, so the document, it starts with this big theme, this phrase about an unwavering commitment to revitalizing American industry.
Has spurred trillions of dollars of investments.
Yeah, that sets the stage. The scale is just immense, trillions.
And the focus areas.
Mostly manufacturing, production, and innovation. That tells you something about the priorities, doesn't it?
It does. Making things here, developing new tech, boosting capacity.
Right. And they even say the list isn't comprehensive.
Which makes you think there's probably even more going on.
Suggests things are pretty dynamic right now, so maybe instead of just listing everything.
Yeah, let's hit the highlights, the ones that show the trends.
Sounds like a plan. Where should we start? Maybe AI. That's getting a lot of buzz.
Good idea. Okay, so Softbank, OpenAI, and Oracle. Project Stargate.
That's the one.
$500 billion. $500 billion. Just for U.S.-based AI infrastructure. It's staggering. It just shows how big they think AI's impact will be. Right? It's not just code. It's the physical backbone, the computing power, the facilities.
Like building the roads for it all?
Exactly.
Okay. And then also at that $500 billion level, you've got Apple.
Right. Focusing on U.S. manufacturing and training. Yeah. Another huge bet on, well, doing things domestically.
And upskilling the workforce alongside it.
Yeah. When a company like Apple makes that kind of move, it says a lot. Maybe about supply chains, maybe focusing more locally. It's significant.
Then NVIDIA, also $500 billion over 4 years. Again, AI infrastructure.
But the key thing there, I think, is the manufacturing.
Supercomputer.
Yeah, pledging to build AI's supercomputers entirely in the U.S. for the first time.
Wow. Okay, so that's not just infrastructure, that's high-tech making stuff here.
Precisely. Bolsters the AI side, sure, but also boosts our advanced manufacturing capability. Less reliance on overseas production for these critical systems. It's about technological independence.
Makes sense. Okay. Switching gears a bit, but still foundational tech. Semiconductors. Chips.
TSMC.
$100 billion investment. U.S.-based chip manufacturing. Given everything, that feels incredibly strategic.
It is, absolutely. Supply chain resilience is the name of the game right now. Chips are in everything, phones, cars, defense. So making more here, it reduces vulnerabilities. Ensure supply for U.S. industries.
Okay, what about healthcare? Seeing big numbers there, too. Johnson & Johnson.
$55 billion over 4 years. And it's broad manufacturing, R&D, technology.
So not just one thing. It's across the board for them.
Yeah, suggests a long-term view. Developing new treatments and making sure they can be produced here. It's the what and the how.
Got it. And Roche, another big pharma player.
$50 billion. Also U.S. manufacturing and R&D. But look at the job numbers they mentioned.
Right. Over 1,000 direct full-time jobs. And then, 12,000 including construction?
That's the tangible impact, isn't it?
Right.
It's not just abstract economics.
Right.
It's actual jobs in communities. Construction gives that immediate boost. The permanent ones offer stability.
And Eli Lilly, also big on domestic production.
$27 billion. To more than double their U.S. manufacturing capacity. You see the pattern, right?
Definitely. Expanding manufacturing stateside seems to be a major theme.
Especially in critical sectors like pharma. Makes sense for national health security. Maybe less reliance on global supply chains for essential meds.
We're all seeing big bucks in core infrastructure. ADQ and Energy Capital Partners.
$25 billion jointly. For U.S. data centers and energy infrastructure.
2 absolute pillars of the modern economy.
And they go together, don't they? Data centers need tons of power. So investing in both digital infrastructure and the energy to run it, that's smart growth.
Novartis, back to pharma. $23 billion. building or expanding 10 facilities.
And creating 4,000 new jobs, they expect. Pharma is definitely a hotspot.
What do you think that is? So much investment there.
Could be a mix. Maybe government incentives for onshoring, strong market demand, just wanting more control over their own supply chains after recent years. Probably all of the above.
Okay, Hyundai. $21 billion total U.S. investment, but the steel plant stands out.
$5.8 billion for a Louisiana steel plant. That's significant. Projected 1,500 jobs there.
Plus, they're partnering with POSCO Holdings, right? A big South Korean steelmaker.
Yeah, brings capital and expertise, revitalizing American steel. It's a concrete step.
More data centers, DAMAC properties from the UAE.
$20 billion just for data centers here. Shows you the demand for data storage and processing. It's just exploding.
Seems like the U.S. is becoming a real global hub for that infrastructure.
It looks that way.
Then CMA CGM, shipping and logistics? French company?
$20 billion investment in U.S. operations and a huge job number attached. 10,000 new jobs expected.
Moving goods efficiently. That's vital. Good for supply chains.
Totally. Reliable logistics are like the bloodstream of the economy. This investment shows confidence in the U.S. market's growth.
Merck. $8 billion U.S. investment following a facility opening in North Carolina.
Another pharma example, yeah.
Clarios, $6 billion for domestic manufacturing expansion. Sounds like batteries.
Could be. They're a major battery manufacturer. Again, domestic production focus.
Stellantis. $5 billion. Reopening a plant in Illinois, Belvidere.
That's a big deal locally. Reopening a closed plant. More manufacturing.
Regeneron and Fujifilm Diosynth Biotechnologies, $3 billion drug production agreement in North Carolina.
More pharma, more partnerships.
Northmark Strategies, $2.8 billion for a supercomputing facility in South Carolina.
Or high-tech infrastructure.
Chobani, yogurt.
Yep. $1.2 billion dairy processing plant in New York, over 1,000 jobs. Plus $500 million expansion in Idaho, food manufacturing too.
GE Aerospace, $1 billion across 16 states. 5,000 new jobs.
Spreading the investment around.
Schneider Electric, $700 million over 4 years in energy infrastructure.
Energy transition, grid improvements likely.
GE Vernova, nearly $600 million over 2 years, 1,500 jobs, also U.S. manufacturing.
Seems like GE is investing significantly across its divisions. Abbott Laboratories, $500 million, Illinois and Texas facilities. Healthcare again.
AIP Management investing $500 million into Silicon Ranch, a solar developer. Okay, so renewable energy investment too.
Definitely part of the mix.
Diageo, $415 million, new manufacturing in Alabama. Beverages.
Eaton Corporation, $340 million transformer plant in South Carolina. Electrical infrastructure.
Siemens, $285 million, manufacturing and AI data centers, 900 skilled jobs.
Tech manufacturing, skilled labor.
Kless and Quality Chocolate, $230 million, new production in Virginia, 250 jobs.
Even chocolate.
Preserve, $175 million fintech hub in Kansas, aiming for 2,000 high-paying jobs.
The financial technology, that's a growing sector.
Paris Baguette, $160 million manufacturing plant in Texas, bakery goods.
TS Conductor, $124 million advanced conductor manufacturing in South Carolina, 500 jobs. More advanced materials.
ABB, $120 million expansion in Tennessee and Mississippi for electrification products.
Electrification is a big theme.
Sega Group, $110 million new manufacturing facility in Indiana. Packaging, I think.
Charms LLC, $97.7 million expansion in Tennessee. Candy producer.
Toyota, $88 million in West Virginia, boosting hybrid vehicle production, securing 2,000 jobs.
Automotive, focusing on hybrids, job security angle there.
AeroVironment, $42.3 million new manufacturing in Utah. Drones and tactical systems.
Saint-Gobain Norpro, $40 million new manufacturing in New York. High-performance materials.
Cygene International, $36.5 million acquisition of a biologics facility in Baltimore. More pharma capacity.
Asahi Group Holdings, $35 million production boost in Wisconsin. Beverages.
Cyclic Materials, $20 million rare earth elements recycling facility in Arizona.
Interesting critical materials recycling. Circular economy aspect.
Guardian Bikes, $19 million bicycle frame manufacturing in Indiana.
Even bikes being made here more.
AMG Critical Minerals, $15 million chrome manufacturing in Pennsylvania.
Nova Nix Limited, $4.6 million synthetic graphite manufacturing Tennessee. Battery materials again.
LGM Pharma, $6 million facility expansion in Texas. Pharma services.
Vidar Inc., $2.69 million new facility in Virginia. Seems smaller, but still adding up.
Okay, wow. That's a lot of individual investments across so many sectors.
It really paints a picture, doesn't it?
And then there are the foreign country pledges mentioned.
Right. UAE. $1.4 trillion over the next decade.
Saudi Arabia. $600 billion over the next 4 years.
Japan. $1 trillion.
Taiwan. A pledge to boost U.S. investment, though no specific number listed there.
Still, massive figures overall signals global confidence, or at least intention, to invest here.
So let's boil this down. We've seen all these examples. What does it mean for the U.S. economy? What are the big potential impacts you see?
Well, several things jump out. First, obviously, job creation. We heard specific numbers, but the document suggests over 1 million direct jobs overall. That drives up labor demand, potentially wages too.
Okay, jobs and wages. Makes sense.
Second, reshoring critical industries. We saw it again and again. Semiconductors, pharma, energy components, steel, bringing manufacturing back. That helps with supply chain resilience, less dependence on other countries.
Less vulnerability to global shocks.
Exactly. Third, supercharging innovation. All that investment in AI, biotech, clean energy, supercomputing, it fosters these new hubs. R&D partnerships pop up. It drives technological progress.
Leads to new breakthroughs, hopefully.
Fourth, the massive multiplier effect. Money invested in a factory doesn't just stay there. It supports suppliers, local services, construction. The estimate mentioned is a 5x to 7x impact.
Yeah.
That can create new boom towns around these facilities.
Right. The ripple effect locally.
Fifth, improved trade balance.
Yep.
If we make more here, we rely less on imports. Maybe we even export more eventually.
Sixth, strengthening rural America. A lot of these new plants aren't in the biggest cities. They can revitalize smaller communities, bring infrastructure.
Seventh, energy independence and resilience. Investments in domestic energy sources, from traditional to renewables, plus grid infrastructure like transformers.
Yeah.
It strengthens the whole system.
Eighth, maybe more aspirational, but restoring the American dream. Lower unemployment, higher confidence, maybe more opportunities for middle-class jobs and home ownership.
Ninth, global leadership and soft power. A strong economy just underpins diplomatic influence, right?
10th, attracting global capital. We saw the country pledges, but all these corporate investments attract international money and talent too.
11th, potentially boosting U.S. dollar strength. Higher productivity, a stronger economy tends to support the currency's value.
12th, revitalization of higher education. Universities often partner on this kind of tech research. Drives investment there too.
And finally, 13th, acceleration of public-private partnerships. A lot of this involves collaboration between government and industry, especially in those key sectors.
Okay, so a really wide range of potential positive impacts across the board driven by this investment wave.
That's the picture the document paints, yeah. Significant potential upsides.
All right, let's make the pivot. The part many listeners are probably waiting for. How does all this economic activity, this potential boom, connect to Bitcoin and crypto? The document seems quite bullish on that front.
It does. The argument kind of unfolds in layers. First, the simple one, rising disposable income. If the economy's humming, people have jobs, maybe wages are up.
More money potentially flowing into investments.
Exactly. Including maybe riskier or growth-focused assets like crypto, just more retail participation possible.
Okay, basic economics, more money, more investment.
Second, big tech integration. Think Web3, NFTs, DeFi. As major tech companies continue building in this space using blockchain, it helps mainstream the underlying tech and the cryptos involved.
Could you just quickly define Web3, NFTs, DeFi again for maybe newer listeners?
Sure. So Web3 is kind of the idea of a next-generation internet built on blockchain, more decentralized. NFTs, non-fungible tokens, are unique digital assets like digital collectibles or art, proving ownership on a blockchain.
Got it.
And DeFi, decentralized finance, aims to rebuild financial services like lending and trading using blockchains, cutting out traditional middlemen.
Okay, thanks. So as those things grow,
It naturally fuels interest in the crypto assets that power them. Third, related to that, is this idea of decentralization as essential. As tech gets more complex, maybe more centralized in some ways, there's a growing interest in alternatives. Crypto offers that decentralized model.
a counterbalance, perhaps.
Sort of. Fourth, increased institutional access. This is the big one. Think Bitcoin ETFs. Banks starting to offer crypto services, asset managers getting involved. It just opens the doors for much larger pools of capital to flow in. Tokenized assets representing real-world things on a blockchain are part of this too.
Making it easier for the big players to get involved.
Precisely. Fifth, stablecoin infrastructure. These are cryptos pegged to things like the US dollar. They could act as a bridge between traditional finance, TradFi, and DeFi, make transactions smoother. Some see them as like a new digital dollar.
Interesting. What about the AI connection you mentioned earlier? How does AI link to crypto?
That's number 6. AI x crypto. Several potential links. AI could analyze crypto markets, sure. But also, maybe decentralized marketplaces for AI models or computing power, paid for in crypto. Or even autonomous financial systems run by AI on blockchains. It's still early days, but the synergy is there.
Sounds very futuristic.
It is,
Yeah.
but developing fast. Seventh, Bitcoin as inflation hedge and treasury asset. Even with a strong economy, Bitcoin's core property, scarce, decentralized, limited supply, could keep its appeal, especially as a hedge or a diversification tool for corporate treasuries, alongside things like gold.
The idea of companies holding Bitcoin on their balance sheets.
Yeah. That narrative, number 8, corporate treasury allocation, suggests trillions could potentially flow into Bitcoin if that becomes common practice. Huge if, but it's part of the bullish case.
A potential game changer, definitely.
Ninth, regulatory clarity. This is crucial. The expectation or hope is that clearer rules in the U.S. and elsewhere will give institutions the confidence they need to invest heavily. Uncertainty holds things back.
Clearer rules equals more big money.
That's the theory. 10th, just cultural legitimacy. As crypto gets integrated more widely, payments, maybe real estate, who knows, it just becomes more accepted, more normal, less niche.
11th, new Bitcoin infrastructure. Things like Layer 2 solutions are being built to make Bitcoin transactions faster and cheaper. More user-friendly apps are coming too, making it easier to actually use.
12th, Bitcoin as neutral global asset. In a world with shifting geopolitics, an asset not tied to any single nation-state might gain appeal.
13th, millennial and Gen Z adoption. Younger generations grew up digital. They seem generally more open to crypto. That's a long-term demographic trend.
14th, crypto-native capital formation. New economic models are being built around crypto, DeFi protocols, DAOs, decentralized autonomous organizations. They generate their own economic activity.
And finally, number 15.
Bitcoin mining renaissance in the U.S. More mining operations setting up here, often using cleaner energy sources, sometimes even helping balance the power grid. That improves the industry's footprint and resilience.
Okay, so a whole raft of reasons why this economic investment could be positive for crypto's growth and adoption.
Exactly. The core idea is that a stronger, more innovative U.S. economy creates fertile ground. More capital, more tech integration, more mainstream acceptance, all potentially benefiting crypto.
So let's try to wrap this up. We've gone through this deep dive, looked at trillions in investment pouring into the U.S. economy, manufacturing, AI, energy, healthcare.
Yeah, a potential period of really significant economic transformation and growth. The scale is just remarkable.
With potentially wide-ranging impacts from jobs to innovation to maybe even strengthening the American dream, as the document suggests.
That's the potential upside laid out based on these investments.
And as we just explored in detail, this potential economic expansion is also seen by some, including the source material here, as a major catalyst for Bitcoin and the whole crypto space.
The argument being that a rising tide in the traditional economy could lift the digital asset boats too. Increased investment, tech adoption, regulatory clarity, it all feeds in.
The interconnectedness is key. Shifts in one area create momentum elsewhere.
Right.
So, as you, the listener, digest all this, think at it. These huge investments shaping the traditional economy. How might that also reshape the digital asset world, your own financial landscape?
What new opportunities might emerge from this potential new American golden age, as some might call it, and what role could Bitcoin play within that?
Definitely food for thought, something to keep a very close eye on in the coming months and years.